Now, this strategy that I'm about to share with you is pure price action. So this strategy has over 90% win rate. I'm not going to say it is 100%. I will say 90% win rate. So my advice for you guys is to be disciplined, use proper risk management, and don't over leverage yourself. So what is the strategy that we are talking about? We are talking about the MAEE. I don't know whether if most of you have come across the word MAEE. So this is one of the powerful formula that so many successful forex traders are using to make money in the forex market. So we are going to unveil this acronym, and then we are going to look into each and every one of them so that you digest whatever I am teaching you in this video. Now, the MAEE stands for market structure, area of value, entry trigger, and exit. So these letter words form the MAEE. So this is the formula that many professional forex traders are using to make money consistently in the forex market. So if you know it very well, you will join the gurus cashing out every day in the forex market. This strategy does not require any indicator, pure price action. You don't need any indicator, you don't even need news. What you are looking at is pure price action. So there is no indicator on your chart, plain chart. So now we are going to follow this formula one after the other. So the first one we have is the market structure. Now, if you want to trade, the first thing you look at is the market structure. Now, the market structure will tell you what the market is doing. So through the market structure, you will know whether if the market is in an uptrend or in a downtrend or just ranging, right? Then after that, you look at the area of value. The area of value has to do with the support and resistance level, right? So after that, you look at the entry trigger. The entry trigger refers to candlestick pattern, right? Then we have the exit. The exit has to do with your take profit and your stop loss. So these are the things you are going to learn from this video. Now, the first one we are talking about is known as the market structure. So market structure will tell you what the market is doing. Now, this is an example of a market structure, right? This tells you that the market is clearly in an uptrend, right? Now you have confirmed that the market is in an uptrend. This is what we call market structure, right? Then this is another example of a market structure. Now through this you can know that the market is clearly in a downtrend, right? Why this one tells you that the market is clearly in an uptrend. So you use a trend line to measure the direction of the market. Now you have confirmed that the market is clearly in an uptrend, and here you have confirmed that the market is clearly in a downtrend. Then this one tells you that the market is clearly in a range, right? Like I said, we have three types of market structure. We have the uptrend, the downtrend, and the range. So like I said, this is the uptrend. The market structure here is uptrend. Then this one is clearly a downtrend, right? And then this one is a range. You open your chart, you look at the market structure and know whether if the market is in an uptrend, if the market is in a downtrend, or if the market is ranging. So that is what I mean by market structure, right? So after you have confirmed the market structure, then the next thing you are going to look at is the area of value. Now the area of value is the support and resistance level. That is the area of value. So after looking at the market structure, the next thing you look at is an area of value. So this is an example of what I'm talking about, right? you have confirmed that this is an uptrend, then the next thing is an area of value, right? Now the area of value here is you identify the support and resistance level. So this is the support level here, right? The market is clearly in an uptrend, right? Get to this level, then reverse, and this level becomes a resistance level, right? Then you map out your horizontal line. Then the price comes again, crosses over, right? Then comes back here and tested the resistance level turn support level. So what do? You draw your horizontal line and confirm this level to be an area of value. So what you are doing now is you are waiting for the price to come back to test this level, because formally the market is in an uptrend, then got to this level, then reverse, telling you that this is a resistance level. And what happens when a price crosses a resistance level? That resistance level turns into support level, right? Now that I've confirmed this is a resistance level, you are now waiting for the price to cross it, right? Now that the price has crossed it, this has become your area of value. You are now waiting for the price to come back to the resistance level, now turn support, for you to take action. So now that you have identified your area of value, so you look at the next action. This is another example of an area of value, right? This is a downtrend, right? And this is an area of value, right? This is an area of value because before the price was respecting this support level, then suddenly the price broke below this support level, right? And what happens when a price breaks below a support level? That support level turns into a resistance level. Now that the price has broke below the support level, you are now looking at this level as an area of value, because definitely the price will come back to test that level, right? And this support level automatically becomes a resistance level. So now that you have confirmed an area of value, what is your next target? The next target is an entry trigger. That is your next target. So your next target is an entry trigger. So what do you use to identify an entry trigger? That is the candlestick pattern. Like we have different candlestick pattern, but for this tutorial video we are going to make use of two powerful candlestick pattern, right? We have the hammer. This is the hammer, right? We have the hammer. This is the hammer. Then we have the bullish engulfing pattern. Then we have the shooting star. Then we have the bearish engulfing pattern. So we are going to look at the hammer, the bullish engulfing pattern, the shooting star, and the bearish engulfing pattern. So these are one of the strongest candlestick pattern that you can use in your trading. So since you have identified an area of value, what you're looking at now is an entry trigger for you to confirm that you are now ready to place a trade. So after you have identified your area of value, the next thing you have to look at is the entry trigger. So what is the entry trigger? The entry trigger is the candlestick pattern. It can be a bullish engulfing pattern, it can be a hammer, it can be a bearish engulfing pattern, or it can be a shooting star. So when you identify the candlestick pattern, it gives you a confirmation that the price will definitely go in your direction. You have confirmed the market structure, which tells you that the market is clearly in an uptrend, right? Right now you have confirmed the area of value, right, which is the resistance level, which will now turn into support level. Then after you have identified the area of value, you are now looking at the entry trigger. The entry trigger is engulfing pattern, right? This is the engulfing pattern, right? So the entry trigger would be an engulfing pattern. So when you identify a bullish engulfing pattern during an uptrend, when you identify a bullish engulfing pattern at a support level, it means the price is going up. So once you have identified the bullish engulfing pattern, you have to place your buy trade, right? And then target the previous high as your take profit. So that becomes your exit, right? So now you have identified the bullish engulfing pattern. the previous high will now become your take profit area, which is your exit. So when you place your buy trade here, you place your take profit at the previous high, and then your stop loss will be below the support level, right? That is the resistance level turn support level. So this is how you trade the market. If you can be able to master this powerful strategy, you'll be making so much money from the forex market. Now let me give you another example of what I'm talking about. Now you have confirmed the market structure, which tells you that the market is clearly in an uptrend. So after you have confirmed the market structure, the next thing you have to look at is the area of value. Now you draw your support or resistance line here, which tells you that this is your area of value, right? You are now waiting for price to come back to your area of value, right? So when the price eventually comes back to your area of value, the next thing you are looking at is the entry trigger. So the first thing you have to do is you look at the market structure, right? Now you have identified the market structure, telling you that the market is clearly in an uptrend. So after you have identified the market structure, the next thing you have to do is to look at the area of value. The area of value is either the support or the resistance level. So right now the price came to this level, then came down here and tested this level, and then went up, which tells you that this level becomes a support level, right? Now that I have confirmed that this is a support level because the price broke above it, then came back and tested it, right? And then went up again, right? Now you are waiting for the price to come back to this resistance level, now turn support level, right? Now when the price comes back to the support level, you are now looking for the entry trigger. So what is the entry trigger? The entry trigger is the hammer. So this is the hammer, right? This is the hammer we are talking about. So once you identify this hammer, you can see the long wick. This is your entry trigger. You wait for this hammer to close, this candlestick to close. Once this candlestick closes, you then place your buy trade and then put your stop loss a little bit below the support level. And then where will be your exit? Your exit will be your take profit, right? Now your exit will be at the previous highs, right? That will be your take profit, while your stop loss will be below the support level. So make sure that your take profit is at the previous highs, right? Because that is where the price might reverse, right? Because this is clearly a resistance level, and this is where the price might reverse, right? So you are expected to place your take profit at the previous highs, right? That is why you are expected to place your take profit at the previous high, which is this. Then your stop loss will be below the support. So this is how you trade the MAEE, right? Now let me give you another example of what I'm talking about. Now this is an example of what I'm talking about. Look at this chart clearly, right? Now the first you have to do is to look at the market structure. Now if you watch clearly, you see that the market is making higher high and higher low, which tells you that the market is clearly in an uptrend, right? Now the market structure is uptrend. You have confirmed the market structure to be in an uptrend. Now the next thing you have to do is to look at your area of value. Your area of value is going to be either the support or resistance level. So when you have identified your area of value, the next thing you have to do is to look at the entry trigger. So the entry trigger is going to be candlestick pattern. It can be either the hammer, it can be either the shooting star, it can be either the bearish engulfing pattern, or it can be the bullish engulfing pattern. So when you identify any of these candlestick pattern, like if it is in an uptrend, you are looking at the hammer and the bullish engulfing pattern. But if it is in a downtrend, you are looking at a shooting star and bearish engulfing pattern. So when you identify this pattern, it now gives you a confidence that the price will go to your direction. Then after identifying the entry trigger, that is when you will now place your trade. You wait for the candlestick that forms that pattern to close for you to place your trade. Then where will be your stop loss? Your stop loss will be below the area of value. If it is in an uptrend, then your stop loss will be below the support level, while your take profit will be at the previous highs. That is where the price got to, and then reversed to test the support level. So this is how you trade using the MAEE formula. Now let me make a rewind, right? So for you to be able to use this strategy very well, there are 4 things you are going to identify, right? One is the market structure. The market structure will tell you the direction of the market, if the market is in a downtrend, uptrend, or ranging. After that, the next thing you are going to look at is an area of value. An area of value will tell you if the market is in either the support level or in the resistance level. So you must wait for the price to come to either the support level or resistance level. That is your area of value. So after you have identified your area of value, the next thing you have to look at is the entry trigger. The entry trigger is a confirmation that will tell you that this market is ripe for entering, right? So what will be the entry trigger? It will be a candlestick pattern, right? If the market is in an uptrend, then you can use the hammer and the bullish engulfing pattern as your entry trigger to place your buy trade. But if the price is in a downtrend, right, you can use the shooting star or the bearish engulfing pattern as your entry trigger. Then after that, you now look at your exit, right? You exit. When do you exit if you are right, and when do you exit if you are wrong, right? So for your wrong will be your stop loss, while for your right will be your take profit. So for your wrong, your stop loss will be a little bit below the support level. If the price is in an uptrend, it can be below the support level, while your take profit will be at the previous high. That is the high that the price reversed from to test the support level. That is where your take profit will be. Why? Because the price might reverse again from that level, because that is clearly a resistance level. So you take profit at the resistance level in an uptrend, and you take profit at a support level in a downtrend, right? Because you don't know, you are not sure whether if the price will break through that level. So for it to be safer, you have to take your profit at that level. So if the price eventually breaks above that level, you can still wait for it to make a retest and then place another buy trade. So this is how you trade using the MAEE formula. So ladies and gentlemen, I believe you have learned 1 or 2 from this video. If you do, please give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on your notification icon to be the first to be notified whenever I publish new content. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. I will see you again in my next update. Bye.